Good morning, everyone, and welcome to the morning homework session for Friday, April the 25th, 2014. My name is Doug McKay. I'm the head moderator and one of the founders of Quantum Leap. Quantum Leap has been around in one shape or form for over 4 years now. We are a self-organized learning environment. We come together. We have a private Skype room that we come to talk about trading, talk about the market, and then each morning we come into these live broadcasts and I do my analysis and set up my trade plan. Now usually I go through a normal routine where I go through the macro key numbers first, then the macro trends, and then I get into some more in-depth chart analysis. There's a series of things that is going on right now that I think is setting up for the perfect storm in terms of getting a major breakout move. So we're going to veer from our normal path of the morning routine, and we're going to get right into a bunch of things that I want to talk about. So before I start, though, if you want more information, you can give me an email at d.mckay@stealthtrader.com, or you can send me a Skype request. I'm Doug_McKay. I'll be the one from Windsor, Ontario, Canada. I do have to get the legals out, so let's do that. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves a risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating in a self-organized learning environment. Okay, so let's start with gold because I want to talk about the gold trade that we did yesterday morning that I called in the morning session. If the system will let me. Okay. So let's start with the big picture. The big picture was we were watching this descending broadening wedge. I mean, anybody that's been around since mid-October knows that we were watching for this breakout, which finally happened here. And then we had a beautiful move on gold, and with the first target being that 1315 area, and then the extended target being up in that 1360 area. We actually went as high and tapped into that 1392.60 area, and we created this cup. And since then, we've been watching for the cup and handle to set up. And we are talking about the fact that it could come down. It would be validated once we broke the 1350 area, and it would remain valid until we got down into the 1258 to the 1261, depending on how you measure it. But I'm looking at two key areas on the composite. I'm not going to get into a lot of gold analysis right now, but yesterday morning, so, you know, I've been playing this long a couple times, and I had a long and I was holding on and came back and stopped me out. But then we had a tech gap Mr. Sneaky on the daily, and again, this is one of my favorite patterns for gold. I usually trade it intraday on the 15-minute, but when it sets up on the daily, I'll trade it on the daily. So yesterday morning, you know, and in the room overnight, I was talking to people saying, hey, we've got a tech gap. A tech gap is where the price moves away from the 9 EMA and leaves this, this space. And Mr. Sneaky is when you have an inside bar. It's like a harami, only we use the wicks and tails. Now, when you get a tech gap with the Mr. Sneaky, these are a double combination. These are usually good. It usually means that you're going to get a sideways move, and sideways, when gold moves sideways, you can trade it because you've got fairly decent range within the day, and or close the gap through price. So tech gaps are closed through time as it goes sideways and the 9 EMA catches up with price, or it closes through you know, price movement where the price moves up to or down depending on which way the gap. You can see this is a great technical gap up here where the price moved back down and closed the gap. But it can also lead to a much bigger move. So yesterday morning in the room and in yesterday's session I said get long gold, tech gap, Mr. Sneaky. Okay, and I got long. I had a nice trade. I still have my runner. Now this morning we had another pattern show up on the 5-minute, which is this flagpole formation. So this gives us an actual measured move up to that, or is that one? I'm sorry, it's this one right here. So there's a bull flag. This can, is a measured move up to 1305. It got to 1303.50. So I would consider that pattern to be valid. What we want to watch for is if we get back above the 9 EMA and the 20 SMA to keep this move and do another retest into 1300 and then hold 1300. And above there, I'm looking for a move back up into that 1315 area again. I forgot to open up my composite chart for gold, so I can't even get into it. But I'm still long gold. I'm still holding on. It doesn't mean that we won't get another retrace, but in terms of my entry price and what I think is a bigger possible move up. I mean, we came down on the daily. We came down pretty close to the 61.8. We missed it, by about $3. And to me, that's a pretty strong move off. So I'm still hoping that this gold move continues up. But what I want to really talk about today is the possibility of a bigger move. So I'm going to do it in a couple different ways. First of all, I'm going to bring up the composite, and I'm going to identify two balance zones. And if anybody's been in the homework session for any length of time, back in the June contract, we had this consolidation back in, I'm sorry, not June contract, March contract, between this area, whoops, oh, come on, this area right here. And there was a period of time from 11/28 through till 12/18 that we were in the balance zone, and currently the microcomposite VPOC for that balance area was at 1281.50, if you remember it. Then of course we've had the move to the June contract, and we had the adjustment, and that 1281.50 got shifted to 1274. 1274.50, I believe. And this is the number that we were watching, when we got up into this balance area and came back down looking to pick up buyers, first at the 1774 and then down at that 1246, 1245 area. But what I've gone back and I've been looking at these days and the patterns within these days. I'm not going to get into a whole spiel on all the similarities. I'll show you some of them when we go on to the homework sheet. But this has a lot of similarity to what is going on right now, okay, in the last few days and what's been going on in this balance area. And the fact that we have had the shift to the microcomposite VPOC. We're about to have a big breakout of range. And the reason why I believe that, let's take a look at the homework sheet here for a second. I'm going to go back to that range that I was talking about between the 1128. So here's the 1128, and then we had the breakout day. We had a 46-point move in the RTH on December the 18th. So I've got these dates highlighted, and then let's just scroll through and look at the day types and the opening types. Now, if you've been paying attention to the homework, lately we've been getting a lot of neutral and normal days. In fact, we just had a very rare occurrence, okay, where we had two normal days in a row. The probability of having a normal day is less than 3% or in around 3%. the probability of having 2 normal days in a row is very rare. But also, we got a lot of neutral days in addition to the normal days. So you can look at this former balance area: normal day, neutral day, normal variation, variation, normal variation, neutral, normal variation, neutral, trend, normal variation. Then we had the 2 normal days, which is a extremely rare occurrence. Here we just had 2 normal days in a row, this week, okay, and then we got that move on the 18th, which was a neutral extreme. And if you look at the range for that day, that was a breakout range at 46 points. So now let's take a look at this last little stretch of time where we've had a similar pattern setting up with the day types. A lot of open auction outer ranges, just like we did back in that last period of time. A lot of neutral days and a lot of normal days. So you look back here, okay, normal, neutral, 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 normal variation, trend, nothing wrong with the trend day within, a couple normal variations, then the trend, then you got neutral, 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 neutral. Very rare to see 4 neutral days in a row. Normal variation, then you get a neutral day, normal variation, and normal, normal. And a lot of open auctions outer ranges. And tightening and coiling on the RTH range. And I think that we're about to see a major breakout of this balance. Now, whether we are coiling from above, if you notice back in this particular range, back around this balance, we went from the bottom, and the breakout day, or the big move, the 46-point day move, happened from the bottom up, and then the breakout was up to the upside. A little bit different here. I'm having trouble with my charts. Come on. Oh, sorry about this. My mouse is acting up on me right now. All right. And you can see that within this balance area around this 64, 65 area, we're at the top. So I don't know if the break is going to be to the upside or to the downside. The only thing I wanted to really emphasize this morning is you want to be very careful in the next couple of days. I don't know if it's going to be today. I don't know if it's going to be on Monday or the next day. What you've got to be careful of is fading any strong move. So a lot of us are a reversion to the mean type trader, and we're taking the we're trying to catch the counter trend. If you see a strong move, okay, I would be very reluctant right now to try to take the counter trade against that. And I would prefer to wait to confirm that a trend is beginning, and then I would jump in the direction of the trend for the next couple days. Or even smarter, if you're a new trader, sit on the sidelines and wait this out. Because I'm telling you, when this move happens, it's going to be probably 35 to 45 point move, and it's going to be there's going to be a counter move to fake people out, and then we're going to have a big push in either direction. Now, the fact that they come up and they've accepted this price up here around 65 leads me to believe that the fact we came down so strong and found buyers yesterday morning. Remember, we talked about the fact that if we got below that 75 that you wanted to get short, okay, was it 75 or 85? I think it was 75. We'll look at it on the, yeah, it was, I believe it was 75. It was the 76 and a quarter CLVN and the 75 value area high, right? It was the value area high for this this area. And I said if you got short, if you got below that, you wanted to get short below the 75.50 for a move down to, test the 68.50. But if we broke 68.50, we were likely to come down and pick up buyers with conviction at 65. Not making this up. Go watch the video. And, I called it, and that's basically exactly what happened. So now we've got, that I've got you warned, we've got to look at where the possible moves could be. Where's a big move? Well, right now we're trading, just below that 68.50. I would be using this 68.50 CLVN as a key area today. And I don't know why this has got a double profile. Let me get rid of one of these. I've been redrawing microcomposites, all last night, trying to figure this all out. And again, I can't tell you what's going to happen. All we can do is we can create a plan, okay, for the scenarios that might particularly happen. So I would be using 68.50, okay, going into the RTH open. Actually, is it 68.50 or is it 68 and a quarter? It shifted slightly to 68 and a quarter. Now, in order to not have my chart, I've taken off my auto peaks and valleys right now, but we'll point out the CHVNs for you. If we get above 68.50 and inside of 68.75, three key things are going to be happening at that point in time. The larger microcomposite, and actually let me just add yesterday's day into the bigger microcomposite. Okay, the larger microcomposite value area is this 68 and a quarter area. The smaller 4-day microcomposite, and actually we don't even have, we can take this day out and just bring in, let's take a look at what it looks like. Come on. Okay, doesn't change the volume point of control or the value area. The value area low on this 3 days of balance is right there at 68.75. And then above that, you've got that 70.70 again. Okay, and 70.70 is the microcomposite VPOC for the last 3 days of balance. It's also right there at that 71. And remember, we talked about the fact that the last time that they went up and made a new high at that 92 and a quarter, okay, they tried to hold value up here at that 81.50, and that 81.50 has been a target for us. We went and hit it overnight in yesterday's session and went up to that 82, I think it was 82 and a quarter or 82.75, but failed to hold that value. But if we get above the 71, then we're getting back in here. So I'm going to be using the 68 and a quarter to 68.75 as my guiding line to get long, into that 71 and a test of that value area low from the prior balance, with the anticipation that we'll get a move through to 72.50 and test the value area high at 75 and a quarter, and just above it, it's shifted slightly. The CLVN that I'd be watching for here, I believe, is that 78.75, which is basically going to break you out of value, put you inside of a larger value, and then break you outside of the smaller microcomposite balance range, and probably give you a good move, strong move up into this 81.50, with the other side of balance on that really being 87 and a quarter, which is going to put you at the value area high. Above that, I would perceive that we are going to have the makings of a major breakout and a run to new highs. So let me just take you one step further. I know I'm going all over the board, but there's so much that I'm looking at. You've got to I just got to put it together as best I can right now. So looking at the geometric daily chart, okay, we've broken out of this longer term downward sloping fork and the mid-term or the shorter term downward sloping fork. And I just drew a new fork in last night. But the fact that we're outside of the two forks that we've been watching, the opposing forks, we talked about the move up to test the center line. Well, guess what? A 40-plus point move to the upside is going to take you up to this 1902 area, on a breakout move. So that kind of gives us a feel of the possibility of where and why we could see a breakout to the upside. Of course, we've got to look at what the downside is, okay? And if we get back below the shorter term downward sloping fork and get inside the longer term fork, we'll likely come down and test. We had this energy point right here. We're just off of it a bit, but a move down into the 1826 area, 1825, what is it? It's around 40 points. So we've got some good destination points. Now let's go back over to the composite chart and take a look at what that looks like on the composite. And you can see that one of my hypotheses has been the fact, and I'm going to just turn my auto peaks and valleys back on so you can see this. Oops. Okay, one of the things that I've been talking about for a while, and we came down and visited it, is this triple distribution point that is between 1839 and 1821 and a quarter, and we're actually even getting some catch up on this 1850 area. But these three CHVNs at 35 and a quarter, 29.50, and 25 and a quarter. I've been talking about these for days, and we keep talking about the fact that we're going to have to come back and do some repair down here because this is undetermined fair value, and we've got a lot of wicks and tails still and improper auction territory down in this area here and down in this area here. So for me, we've got the potential and the destinations for a big breakout move in either direction. One, a breakout to a blow off top and making new highs in the test of the 1900s. And for me, if we get into the 1900s, you know that I'll be looking at a move to 1910 as the rule of 10 of coming up to a centennial number that we've never been hit and blowing through it by 10 points, and that will be, a immediate target for me above there. But it puts it right in line with a major breakout move within the balance area that we are right now. But I also have to have, a counter plan, because they may get you thinking long, but then they may take you short. And for me, a break below this 1855 and a quarter will break us into the value area of this, balance zone right here, and a move back towards that 4350. Where they tried to hold value before falling down further and coming back down into, and remember what our destination point was, and just going back and watch the videos from back in these days, where we were trying to hold value here, and I said if we couldn't hold value in around that 34 area, we'd have to come down to where they started it all. And where did they start it all? At this 1807.50, and that was a big target for us to come down and pick up buyers. We came down and picked up buyers a few times now. So for me, if they can't hold the 55, I think we're going to get a big move down towards this 43.50 and more likely have that big breakout move and come back down into this area right here. into the triple distribution zone. So let's go take a look at, of course, we don't know if it's going to happen today. We can only take a look at how we can trade it and what our levels are so far. Let me bring up my Globex chart. Like I said, I always like to look at the big picture first to know where the structure is and then start drilling it down to get a better idea. So our overnight high right now is up at 1874.75. Our overnight low is down at 65.75. And our overnight VPOC is currently at 71, but we're getting a possibility of a double distribution, okay? And net inventory is currently short on the Globex. And we've got an LVN right here at 68.75. How beautiful is that? What did we talk about here as a breakout? 68.75. All right, so we take the LVN from last night and we put it in here at 68.75. Now, here's something. In fact, you know what? I'm not even going to put the LVN because it's going to be my main trade line. So I'm going to put it as a trade area because look, it's right at the value area high. The value area low from yesterday as well. Let me just do this. Howard, keep me in touch with the time. I've got, a lot I'm still trying to get done here.
16 minutes to open.
Okay. All right, so to me, this is the major line in the sand for long, to get long. Inside of that, you're inside of value. You're above the CLV, above the LVN from the prior night. We just got the VPOC shift, so the VPOC has just shifted down to 1867, which was one of the things I was going to talk about. We're likely to get a VPOC shift because we've got a double distribution going. So you've got the LVN, you've got double distribution. Let's just go to the bigger picture. All right, and you've got a move inside of value above the CLVN. So everything above 68.75 puts you back into yesterday's value area, and the two targets above will be the 70.75 and then the naked close at 72.75, which is also right there at the 72.50 CHVN. And we're going to put our second target at 72.50. And then, of course, the overnight high is 74.75. But the fact that we've got 15 minutes to go and we're trading near the overnight low leads me to believe we're probably going to take out the overnight low first, come down and test this 63. We'll get into the hypothesis for below 68.75. But if we get a move through the into the value area, move to 70.75, push through to close the gap at 72.50. So we've got a VPOC close, a gap close, and a move to the CHVN, and a push through to take out the overnight high, and of course that value area high, and what was our line in the sand yesterday at that 76 area. 70, we said 75.50 to get short, 76.25 to get long. That's going to be our same trade area, okay, to break out of yesterday's value right at the value area high. Look for responsive sellers to possibly step in here and rotate us back down into, which was a pretty decent bell curve yesterday. But above 75.75, you got to be looking for a range breakout and a test of the other side of balance up here at that 78.75. See how nicely all of this is all coming and fitting together? And then above that, your main target above, as that above value, main target above value is, and range is 81.50. Come on. Okay, with the other side of balance being up there at 87.25. And remember, 87.50 was our former all-time high and year high, and the month high from last month. So that will be, you know, our secondary target. Right there, and then of course our extended target above at 1892, and I'm going to put a breakout target, okay, and I'm going to put that up at a test of 1900. Don't need target twice. Sorry, I do this in real time, gang, because I want you to go through the thought process with me. I could just put all these levels on the chart for you and not narrate it, but I don't think it has half the power of understanding the thought behind it. So below the 68.75, you know, where do you get short here? It's really difficult to find a level right now to get short because you're coming into this microcomposite VPOC and the composite VPOC coming in from, you know, I'm sorry, the composite VPOC from the swing low of October the 9th, 2013. But the problem is, what are you going to lean against? You really have to lean against this 68.75. So this really causes a problem because we're right in the thick of, you know, major price acceptance right now, and you're going to get a lot of two-way choppiness. So I mean, if you got other indicators you can use and you want to take the chance of getting into a trade here for the takeout of the overnight low, I mean, the thing that I would be looking for is the takeout of the overnight low if you see, you know, a strong amount of selling coming in, and you know, just to move back towards the 65. But the problem is you can see some pretty strong you know, responsive buyers stepping in again at the 65. So you got to get in, you got to get funded, you got to take risk off the table right away. It's a very dangerous you know, trade area to get involved with. To me, I think you really got to wait for the breakout. You know, and if we come down and we start testing, you know, the other side of this balance down here, you've got to make a VPOC down here at 63, and you've got the range low at 63.75. If anything, maybe take take the you know, I just can't see anything. You know, I wish I could, because I wish I could find something to trade right here. But the only thing I can find is a breakout trade of 63.75, and you got to get funded right at 63. With the hopium, or the wishful thinking, that we're going to get a push through, which would be the first target below here to the CLVN at 1860. And I would even front run that, okay, up at the 6150 area. Remember 6150 and how often that number came out? And I would use the 60 as a possible area for support to come in to hold us up, you know, inside of this this balance zone and major price acceptance. But below 60, then I think we've got some work to do. The first destination below that is 58.75. And then the big number, of course, is going to be this 55. And for me, 55 is going to be a key line in the sand below. $55.25. Come on.
55.75 is the full session ATR target also.
Oh, good point too. Can you give me the up and down on that right now?
55.75 full. 60.75 is the, well, RTH hasn't started yet, so don't worry about that one.
Yeah. All right, so just below the 55, we've got that 50-50 area, which is shifted to the 49.50. In fact, I would even front run it. I would take the 50-50, okay, because 50-50 was the number that was constantly becoming a target. Again, you'll know this if you've been in homework sessions for any length of time, with the the other side of balance being that 45.25, and you got that naked depot right here at 46.25. So I would make this a target, front run it by say 2 ticks, and have your trade area at 45.25. And I'm doing a big extension on this, I know, because I've got to be looking for big, for where my targets are and know what I'm going to do for, and where the areas are for this big breakout. That's a possibility. Okay, so below the 46, the big target and our extended target for the first push down is going to be this 43.50 former microcomposite and naked VPOC. Okay, with the naked close at 39.75, and then a very big line that we've been using before is that 39. So another spot that they might have responsive buyers stepping in, and you'll get bounces. Okay, and then below 36, the big number again is the 34. I would even call it 35.25 now. Go with the CHVN rather than the former microcomposite. 29.50. Come on. Why does it not want to? I'm going to edit your button. I'm going to cut you to downsize. Okay, 29.50. Okay, which is going to be that extended breakout move.
Just under 5 minutes to open.
And then, of course, just below that, you've got the 25.25 and the other side of balance, and what I would consider to be the capitulation spot for the bulls, and where we're likely to come back. And I don't think we're going to hold 1800 this time. I think if we get the bigger move and we break below this 21, you got to be looking at testing 1800 in this major CLVN at 1799, and below that, you know where my spots are. 91, 84, but the big one is that former one, and where I started the whole conversation, which was the March microcomposite at 1781.50, which has been adjusted to 1774.50. But I'll put 21 in as a trade area of the other side of balance around that triple distribution zone, because I think we'll come down here and get stuck in there in this range again for a longer period of time, because that will be a major breakout from the current balance that we are. So right now, so that's going to complete my analysis. I'm not even going to bother with the Russell today. I wanted to get a feel for the major market. Have we put a new low in below 65.75, Howard? Just want to make sure I've got my lows still correct. 65.50 is our new low. All right. So I'll post these charts. It's going to be hard to get it all in. It's going to be kind of convoluted, but hopefully you've been paying attention. Let's just take a quick look at the Keltner, see what we have possibility. We have a possible walk the line setup. Okay, if we come here and test this 64.50 area, 64.75, then get a Renko reversal and come down and close below this Keltner line, the walk the line target is going to be most likely that 61.50 area, 63 for sure, but most likely 61.50 with a strong walk the line setup. And this is actually setting up not bad. A move to test the upper Keltner is going to take us up to take out the naked VPOC at 70.75. and get us back into value and above that 68.50. And then if we break above the upper Keltner line and continue the move up, a move to test the upper Keltner line. By the time we get there, will be a value area play from the value area low at 68.75 to the value area high at 75.75. Would give us a test to the upper Keltner line. See how it all plays together? Anyway, I am going to sound off and say, be careful out there. If not today, for the next day, the move is coming. Okay, it's not a matter of if; it's only a matter of when. I can't predict time. I can only predict structure and auction. I am going on vacation. I will be gone. There will be no homework sessions right through. I'll be back on, I think it's May the 5th. That is Monday. Yeah, May the 5th. So I'll be back for May the 5th. As always, okay, if you like what I do, just give me a shout out on Twitter or like the video on YouTube. I do this for free, and it's good to build the the following, and hopefully I'm helping you become a better trader and understand the volume profile and the auction logic. Trade well, trade safe, and we'll catch you on the flip side.